I've scaled my business to over 7 figures a year and multiple of my clients as well. And I want to help you do the same. And this is the one thing that absolutely no one talks about when scaling, but will most likely trip you up. And I've seen it trip up dozens of my clients. And it's even tripped up myself. And that is what you should care about as far as gross margin goes, or gross margin dollars. So when we're talking about gross margin, this wonderful term, and it sounds like a very hard term, like in accounting, right? But when we think about this, we just need to think about this in really simple terms. It's a fancy way to say profit, or your gross profit, where you're grossing, right? So all this is, if you really break it down, revenue minus costs. You can get more specific with it, but just think about it as revenue minus costs. Money in minus the money you spend to deliver said product to customer equals your gross margin. Phrasing the question, what should you care about? Gross margin percentage, or should you care about gross margin dollars? And you might be saying, Soren, what do you even mean by that? So for example, to calculate gross margin percentage, it's a little bit different because you're going to get your gross margin here by doing revenue minus cost. So let's say your revenue is $100. It costs you $70 to perform said tasks. That means your gross margin is a whopping $30. Now your gross margin percentage is your gross margin divided by your revenue, which would be also 30% in this case. And a lot of people will say, and I bring this up with gross margin, but we oftentimes, when we're scaling and working on our businesses, we look at percentages right here. And this is what kills us usually. And they're extremely important, but usually we get wrapped up in them in different things such as sales, marketing, fulfillment, because we tell ourselves that only we can do what we do. So for example, in sales, right, you might have a close rate, because you're the founder, of 60%. You close over half of people that you get on the phone with. And that's awesome, good for you. But you want to bring on a closer because this is taking you, in order to close 60% of your sales, it might be taking you 20 hours a week. So you bring on someone else, and what happens is instead of them closing at 60%, they end up closing at, oh no, 40%, big bad red number. And you say, I can't hire anyone else out to do this because I am losing 20% of my revenue by doing this. AKA, your percentage here is going down. Instead of bringing in $100, you bring in $80, for example. And then maybe because your gross margin is 30% on that $80, you're bringing in $24 of gross profit instead of $30. However, assuming you don't have fixed costs, assuming they're all variable. Again, these are some accounting terms that are important to know. Fixed costs, if this was $70 of fixed, that means whether you make $100, whether you make $70, whether you make $120, you're gonna spend $70 no matter what. Now, realistically, most businesses have some fixed costs and some variable costs where, you might have $30 of fixed, but then on a per client basis, you have variable costs that goes up for fulfillment on time. And again, assuming what I said, if your revenue goes down to 80, you're still bringing in 24 gross margin dollars. That's assuming your gross margin percentage here stays the same. It doesn't always stay the same. But the issue is we say no one can do it better than I can do it. Therefore, I have to do everything. And this is costing you an extreme amount of money and is preventing you from being able to scale your business. Just simply put, here's why. And shout out in this video to Dan Martell. He did a really good book on this called Buy Back Your Time with your buyback rate. And basically the principle of that is you take your revenue and you divide that by 2,000 hours to get your buyback rate. So an example of this, 100K divided by 2,000 hours is $50 an hour, right? So if a task costs you less than $50 an hour, that is below your buyback rate and you should be hiring someone out to do that task. If it's above $50, it's something you should be focusing on. So when it comes to sales, for example, usually sales is one of those things where you make more money. The exception here, and I put an asterisk next to this, is because there's one thing, and typically we recommend with our clients, we really recommend doing organic content until you hit $1 million a year, or at least, you're doing 50K months, about $500,000 a year. It gives you margin, again, what we're talking about here, to then go run ads. Different video for a different day. But when we're talking about sales, you can then dump time into marketing to get more leads through the door. And the thing with sales is sales can take an immense amount of time away from you from being able to work on your business and makes you work in your business. So you might be able to get this 20 hours back by having a sales closer out there that closes 40%. But if you were bringing in, let's say, 10 leads a week and closing 60% of them or getting 6 closes versus your closer who only gets 4 or 40% of that, but you free up 20 hours, you go dump 20 hours into marketing. Instead of bringing in 10 leads, you're now going to bring in 20 leads. Now you might say, hey, well, I would close 12 of those leads. Well, guess what? Your closer is going to close 8 of those leads. You're still going to be ahead by 2 whole sales per week, increasing your revenue. And again, we're going to get to this. The whole point of the video, you're going to increase your net margin dollars. So if you got a 25% bump, you went up to like 125 here, because you're getting 20 sales calls a week, you're in a much better position. You're going to have more net margin dollars. Now your net margin might go down because you might be paying extra $10 to your sales rep or 10% of your revenue to get that. But instead of having, let's say, 30 to margin dollars, let's say your new cost is 80, the difference from, 125 minus 80 is a whopping $45. So your net margin went from $30 all the way up 50% to $45. Now the really interesting thing here is net margin percentage. This can happen where you have more dollars, but your percentage goes down. Or for example here, like your close rate went down. When we focus on percentages, and my whole point here is don't get tied up with percentages, because these will kill you. Because even though your net margin percentage is going down, you're getting more dollars in your bank account than you otherwise would have, period. And what do these margin dollars allow you to do? They allow you to go reinvest into more people for fulfillment. They allow you to up your ad spend on a monthly basis. They allow you to hire better video editors so your content performs better or looks more professional. Or again, it goes into your pocket. So you should not be concerned about what your gross margin percentage is. You should know what it is. You should be aware of what it is, but that shouldn't be your primary objective. And I'm gonna give you an example. Most SaaS companies run at 80% gross margins. So everyone puts this number out there of 80% being this gold standard to hit. Except, for example, if you're a B2B SaaS company doing CRMs for, I don't know, dog clinics, that might be a relatively limited market. Your revenue might cap out at 30, 40, $50 million and never really go beyond that because you've saturated 30% of the market in the US, or maybe, however wide you go, and you have your price point as high as it can be, but like you're not gonna get bigger than that. Versus Costco that has like 2% gross margins. However, instead of making $30 million in revenue, they do billions of dollars in revenue and billions of dollars in profit. And my question for you is, would you rather have gross margins at 80% with $30 million and bring home, I don't know, let's say $20 million a year after all expenses? Or would you rather bring home billions of dollars? Now, this is obviously an extreme example. Not everyone's out there building the next Costco, but it's a prime example of where gross margin percentage might be very small, but at the end of the day, what we really care about is gross margin dollars because of the amount of volume that we are moving through the store or through the business. And at the end of the day, it's dollars in your bank account that counts, not percentage points on your balance sheet or on a financial report. So keep this in mind when you're scaling your business. It doesn't have to be exactly what you do. Even if you're not as efficient when it comes to doing one of these tasks, or your employees are not as efficient as you are, again, it can still put more money in your bank account, which is at the end of the day what you are going for. Don't let the fact that someone might not close as good as you or fulfill as good as you hold you up from scaling your business. And this is something, people talk about it. Everyone always says something along the lines of someone doing 8% of what you do is better than 100% of what you can do for yourself. But again, you just have to recognize, and I made this video so you could look and see the percentages across your entire business, whether it's gross margin, whether it's marketing, whether it's sales, whether it's fulfillment. Anyways, if you got any value from this video whatsoever, please hit that like button and subscribe to the channel. If you have questions, please leave a comment down below. And if you are looking to scale your business with organic content, hit that link down below. We're doing this super awesome content diagnostic program right now where we will actually create content for you for free for 72 hours. And if you're interested in that, hit the link down below, and I'll see you in the next video.